Fantom is becoming unstoppable, and Ethereum has started to take a divergence. This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter at AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Bitcoin headed towards $23,000 today after a night of losses erased Bull's latest progress. This morning, the U.S. Jobs Report came out saying employers had added 517,000 jobs in January as hiring unexpectedly surged despite high inflation, rising interest rates, and the prospect of a weakening economy. The unemployment rate fell from 3.5% to 3.4%, the lowest since 1969. Andrew Hunter of Capital Economics wrote, "The economy is clearly not as close to a recession as we had suspected." Yesterday, I asked you guys what blockchain you think could replace Ethereum, and it seemed most of you think Ethereum is unreplaceable, with Emmanuel and Ray saying this. My question for you guys today is if you had to pick $10 million in cash or $10 million in crypto, which would you pick? Let me know in the comments down below, and I'll share my favorites on Monday. The Fantom network has been outperforming its crypto counterparts recently. Fantom has made an impressive 193% move over the past month, outperforming most. Andre Cronje tweeted 13 reasons why he's bullish on Fantom. The first of which was fast confirmation times, with the network boasting a sub 900 millisecond finality. This provides a smoother user experience for dApp builders and users. Next is gas monetization, allowing your team to earn revenue on gas fees on your contracts, earning 15% of all gas spent on your contract as revenue. And also gas subsidiaries coming later this year, allowing users to onboard without needing Fantom. In the second half of the year, Fantom will support native smart wallets. These allow wallets to be owned by normal Web 2 methods such as username and password, social authorization, and facial recognition. Fantom is compatible with leading programming language Solidity and Viper. This means developers do not need to learn a new language to build on the platform, and onboarding is easy. The project has sustainable funding and revenue via Gitcoin grants, ecosystem vaults, and gas monetization. Additionally, the network has proactive security in the form of an automated on-chain continuous auditing. Fantom is the oldest smart contract chain after ETH, operating for 4 years with 99.99% uptime. And lastly, Fantom has enough money for a 30-year runway, allowing ease of mind in building a platform that will still exist for decades. NFT marketplace Opensea has released the next phase of its Drops feature, releasing a new suite of tools for creators that launch their collections in partnership with Opensea. Opensea said the first version of Drops offered an immersive experience to select partners that launch their collections on its platform. Over the past few months, we worked closely with 20 amazing teams to build the best-in-class Drops experience that includes features like multi-stage minting phases, allow-less support, and rich storytelling elements. The next phase of the Drops rollout will give creators the tools to manage their own minting experience, including deploying smart contracts across all supported EVM chains, configuring drop mechanics, personalizing landing pages, and more. Opensea said the feature will gradually open up to select creators in the coming weeks before eventually opening up to the public. Opensea has been experimenting with personalized landing pages for drops on its site, including new releases from OMG Kirby, Cloud Machine, Probably a Label, and Anthony Hopkins. Personalized pages on the marketplace have videos, image galleries, details on utility, and project roadmaps. The site has also been making waves for taking a hardline stance on enforcing creator royalties, going as far as to block certain secondary marketplaces that don't enforce royalties from selling NFTs that were originally minted on its platform. Efinity token is now approved by the JVCEA, aka a Japanese regulator. Efinity is a blockchain custom built for NFT transfers and makes NFT transfers cheaper, more efficient, and more scalable with protocol-level NFT-specific features. Efinity is used by major game developers and a part of the Polkadot ecosystem. Only 65 tokens are JVCEA approved as of February 1st, including Bitcoin and ETH. Efinity joins a handful of approved metaverse and gaming tokens with Engine Coin, the SandBox, Axie Infinity, Chiliz, and Clayton. Engine became the first approved metaverse gaming token in 2021. The Engine team is a core contributor to Efinity and help Efinity pass the stringent Japanese screening process, which will now facilitate building on Efinity by Japanese developers and users. Bitcoin and ETH have been taking different paths so far in 2023, which could present a buying opportunity for crypto investors. The two largest cryptocurrencies' net position change on exchanges has veered away from one another after correlating closely throughout 2022. An asset's net position on exchanges is the difference between deposits and withdrawals. Bitcoin's net position on exchanges reflects a declining supply, meanwhile Ethereum's net position indicates a larger stockpile on exchanges. An asset's exchange net position is noteworthy because increase in value often precede an asset being sold, while decreases indicate that investors are removing the asset from exchanges to place into cold storage. The ETH Bitcoin currency pair is down 3% year to date after being off as much as 8%. ETH has underperformed Bitcoin despite its supply contracting by 6,700 ETH since September. ETH's correlation relative to Bitcoin has fallen 18% since January 23rd without a clear explanation why. As we mentioned before, one reason why investors could be preferring Bitcoin right now is the uncertainty around the Shanghai upgrade in March, when investors will be able to withdraw staked ETH and rewards, as well as Bitcoin historically leading bull runs with Ethereum coming in later. Late last night, the Orion Protocol was hacked. Orion Protocol is the first decentralized gateway to crypto that allows you to access major centralized exchanges, decentralized exchanges, and swap pools from your own wallet. They were hacked due to a re-entrancy issue in its core contract. Alexei Koloskov, the CEO of Orion, tweeted saying, "Orion is secure, Orion is strong. All users' funds are safe and secure." Binance CEO CZ followed up by saying there was a hack in Orion Protocol due to a lack of re-login protection. The loss is $3 million, and our security team is monitoring the hackers' addresses. No Binance users or assets were affected. Injective is an open, interoperable Layer 1 blockchain for building powerful DeFi applications. Injective is built with the Cosmos SDK and leverages a Tendermint-based proof-of-stake consensus mechanism, which allows it to achieve instant transaction finality. Injective recently announced that Solana assets are now live on Injective, bringing forth new forms of composability to the entire Web3 ecosystem. Injective will serve as the primary Layer 1 gateway for Solana assets to enter the broader Cosmos ecosystem. Starting today, the Injective Hub supports the transfer of SOL into Injective. The Injective Hub has also integrated Fantom Wallet, the most popular Solana wallet, to provide Solana users with a familiar experience when onboarding onto Injective. They say the recent Wormhole integration has allowed Injective to become one of the most interoperable networks in existence. Injective thus became the only blockchain in the Cosmos ecosystem to have Wormhole support. They also recently announced the launch of their new $150 million ecosystem initiative to further accelerate developer adoption of the only lightning-fast blockchain optimized for financial applications. The effort is joined by some of the largest institutions spanning across Web3 and traditional finance, including Pantera Capital, KuCoin Ventures, Jump Crypto, IDG Capital, Gate Labs, Delphi Labs, and Kraken Ventures. The core focus will involve backing builders pioneering new ideas across a diverse array of sectors, including interoperability, DeFi, trading, proof-of-stake infrastructure, rollups, and scalability solutions. Virtual world SandBox's Sand token is witnessing a surge in price over the past month ahead of its token unlock scheduled for February 14th. As we recently mentioned, token unlocks, which are usually considered bearish events, allow early investors to sell their tokens on the general public. SandBox also just announced staking in a tweet saying, "Great news, staking pools will be refilled with 200,000 sand per week for the next 4 weeks, starting February 7th. Also, the sand cap for landowners' staking pool increases from 1,000 to 2,000 per land. But remember that on February 14th, 12% of tokens will be unlocked, which is around $275 million, so be careful of this trap. The day after the unlock on August 14th, nearly 75% of all significant trades were sell orders as investors looked to cash out of sand. That sell pressure continued in the days after the unlock as sell orders dominated buys. The SandBox has an unlock schedule that is due every 6 months until 2025 with the same allocation to investors. Therefore, sand holders could look to face a serious selling pressure in the next 2 weeks. That's it for your Altcoin Buzz news update. I'm your host, Cody Buffington. Thanks for watching.